All right, guys, let's do it. Another Robinhood portfolio episode. Today, the portfolio is up $356, and after hours, I'm up $13. So, what happened in the markets today was that the Fed had recently announced that they were going to sort of pause interest rates going up. Interest rates were starting to become neutral. There's a neutrality to these interest rates going up, and a lot of investors were really happy to see that the interest rates were not going up. There was not an increase in interest rates. I know that was a big topic. I know that there's a G summit coming up. Something with Donald Trump's going to sit down with one of the Chinese leaders. They're going to talk and discuss tariffs. If things don't go the way Donald Trump wants it to go, then we might see another round of tariffs. So the market is closely watching that. Overall, pretty good day. I think that a lot of the fears have been shaken off as far as the interest rates going up. They could still go up, but today was pretty good news as far as the rates being neutral, and that's always a good sign. So right now, portfolio is up $356 again. I'm just going to go over what I've been buying as of late. We're going to start out with Apple. So Apple is brought back into the portfolio, guys. I've talked about this in the previous episode as far as having Microsoft. I had an equity of Microsoft of about $3,000. I had $3,000 in Microsoft, and the equity got moved over to Apple. I hinted around that I was going to do that. I don't know. The thing is, I like Apple a lot. I just like what they do. I like the iPhones. I like the computers. I like the Apple Watches that everybody has. So just a good stock. It's a really good stock to catch on a dip. And I really thought that their dip was just really over-exaggerated. I think this hit a bear market, actually. This thing was down almost 20%, I think. But my average cost, $173. I think that's fine for where it is. 10 shares, equity for about almost $2,000, guys. I'm up $80 on the stock. I knew Apple was going to come back. I knew Apple was going to come back. Microsoft's doing good, and those two companies are sort of just fighting it out as far as which tech stock is going to be the leader here? Who's going to get back to that $1 trillion market cap? Bank of America, 28.39 today. Today 2%, almost 3%, 69 cents return. Let's see, shares, 50 shares. So I've increased my Bank of America shares. I've become really bullish on Bank of America. I just think it's a great financial stock to pick up. Should be a good buy and hold for the next several years. I need to learn how to start holding my stocks longer. I can admit that. Total return, $32. Total return, $43. Today's return was $32. Not a bad day for Bank of America at all. Costco today, $230. My position is $221, 10 shares. So Costco, again, was back in the portfolio. I think they were in the portfolio in the last video. Very good day. It's almost $73 for a total return of $88. Yeah, they should have a very good holiday sales. Costco is a really good stock. It's overvalued, but it's overvalued for a reason, because it's really good stock. They sell the Costco pizza. They sell pretty much everything you can ever need and more. So, I actually like them better than Walmart. I really like Walmart a lot. I think Walmart is starting to trend back up too. Enbridge, it's a new stock I put in my portfolio there. I had a Shell company in my last video. I was really high on the Shell as my energy stock. I just needed not another energy stock, but this is actually a Canadian energy stock that I recently bought. The thing about these energy stocks is I only buy them for the dividend. I bought Shell because I was looking at their dividend. I'm like, oh man, that's really sweet. 94 cents for 61 or something like that. So it was really good. 50 shares of Enbridge, equity almost $1,700. Yeah, portfolio diversity, 11%, up $19. Really fat dividend here. I think it's 5% right now. I bought these energy stocks for dividend. I really like their dividends. Enbridge is a good Canadian energy stock. Really decent, a really decent stock. I took a short-term loss with Shell Company because I just wanted to get some Enbridge shares, and they're very cheap. You can buy these cheap shares and get a huge dividend back as long as you hold on to your shares. McDonald's, $187 today, a really good day for McDonald's. Total return, $228. This is really just going local insane. better than I actually had Starbucks and the recent portfolios way back. And I would have been super up on them. 10 shares, average cost 165. Yeah, not much to say about them. Big Macs, fries, everybody going crazy. Everybody ordering off their new dollar menu. I think they have another dollar menu. Actually, they have that $6 menu that I think you get the Big Mac of fries, you get an apple pie and a drink. That's a lot of food for $6, but it's a blue chip stock. It plays a pretty good dividend. I like them a lot. 3M is back in the portfolio. So I had Boeing, I think, in the last portfolio. That was sort of like my industrial play, but I keep going back to these stocks, guys. I don't know. I keep going back to these the 3Ms of the world, the Costco's of the world, these super high, overvalued stocks, but they're overvalued for a reason, I guess. Average cost $197, 10 shares for equity of $2,000. Total return of $70 on them. It's really a good stock to really hold. Diversified industrials. They do have diversified Medicare and 3M. Is a very good stock. It's a dividend aristocrat. Yeah, it's a very good industrial stock if you can hold on to it. I've sort of been trading off and on with Boeing and 3M. I don't know which one I like more. I guess I like 3M more. I keep going back to that stock. I'm going to try to learn how to hold that stock a little bit longer than what I was doing. Altria is back into the portfolio. Average cost, average cost 53, 15 shares, equity at $831. The reason why I bought Altria, it's a no-brainer. It's a no-brainer. 52-week low is $52. When my shares are about $53, I'm right at the 52-week low. The dividend yield is actually 6% when I bought this thing. This thing is incredible. I like there's been some speculation about Altria getting into the marijuana stocks, the weed stocks that have been going crazy. But there's a lot of fear and scare about the FDA coming down on Altria, banning their cigarettes, and a lot of investors didn't like that. That's what happened right here. With the sell-off right here is all just nothing but the FDA and the market sentiment of selling off stocks. So. It's a good stock to buy on a dip. I needed a consumer staple stock, so I had Colgate, I think, in the last video, but Colgate was not paying me enough as far as their dividends. I think Colgate has a 42-cent dividend and Altria has an 80-cent dividend. So not only is Altria cheaper than Colgate as of right now, but they pay more. They pay more in dividends. So this was a no-brainer. It's easy to see why Altria is back into the portfolio. Verizon back up to 60. I've been trimming my position. I really should have just held my position. It went back up to 60, but I'm taking the money. I'm trying to learn how to hold on, guys. I like to call myself an investor. I don't like selling stocks, but the thing with Verizon, it just got too high. I don't know what to say about this thing. I think for the 2 weeks, this thing just shot up. I had to sell, guys. I had to take the money. You can't be greedy in this market. Don't be greedy in this market. I'm not afraid to sell, but Verizon is a good stock. If you hold on to it, a really good dividend yield, a very nice dividend yield. The stock has really gone up, guys. If you can try to buy this on a dip, I would say, get in on a dip. I've been doing some sort of covered puts with this stock. Just going to show you guys what I've been doing. There it is right there. So you can see a put buy right there, $60, a put buy, 12.7, $67, and I sold it today. So I had a day trade that I did. I used a day trade and it went well. Yeah, it went well. So that was a good play there. I did that today. I'm just trying to manage my portfolio losses whenever Verizon sort of just dips out or whatever. Wins the results. Up $112. My average cost is still $99. This is another stock that's really just exploded on the scene. I knew that this stock was sort of undervalued at that $99 mark, but $129. So, you buy the low, and when you're buying the low, you're saying to yourself, oh, I'm in at a good average cost. What's going to happen? Is the stock going to go lower or is it going to go higher? Well, this stock took off, guys. This stock just exploded throughout this past week, up $112. And that's what I said. I said in the last video, these casino stocks, they go up real fast and they go down real fast. So what do? Do you take the profits or do you just hold on for the long term? I think I'm going to hold on to this stock a little bit longer. Again, guys, this stock was once $203. The 52-week high was $203. And that wasn't really long ago. Yeah, look at that. June 4th, 2018, this stock was 100 and well, wait, June 1st, 2018, this stock was $190, guys. And then it just took its giant dip or whatever, but yeah, $190. I mean, what can you say? I knew that this thing was just undervalued. I was screaming a buy. I just love these casino stocks. They have very good diversification in the real estate sector. The China casinos, Wynn Resorts is diversified among them. Just a good stock to hold. I really like them a lot. Yeah, that's going to do it. That's nothing else. There's nothing else to see in my portfolio. I have a watch list, Johnson & Johnson, right here, overvalued, but I really want to get them back into the portfolio because I sold AbbVie high. I think I sold AbbVie around $88. I said it before. The thing is about these pharmaceutical stocks. I'm not high on them. I like Johnson & Johnson. I want my money in this stock. This stock has proven to be, sort of like, I wouldn't say, recession proof or anything else like that, but this stock really held its own during that last October downfall when everybody was selling off their October stocks. It seemed like a lot of people just started putting their money in Johnson & Johnson, and this thing has just took off, $146. I remember buying this stock at $120. I should have just held on to the stock. So that's really it with my portfolio, guys. There's another thing I just want to quickly talk about. I'm really just trying to hurry up and finish this video. Visa. You'll see why I'm just showing why the portfolio is up so much today. Visa had a good day. So we can see an option contract right there. Option contract had a value of $56 today. So I bought that contract and I sold it. I looked at it. I turned away for about an hour, so I looked at it again, and the stock got up to about $56, and I sold off. So, I'm playing options a little bit more. I really don't like options. Don't use options if you don't know what you're doing. But that can attribute to why the portfolio is up so much today. $356, and the after hours is not looking too bad either. $12.28. That's going to do it, guys. Again, my portfolio in a nutshell: Apple, Bank of America, Costco, Enbridge, McDonald's, 3M, Altria, Verizon, and Wynn Resorts. I really want to get Johnson & Johnson back into the portfolio because I see a weakness with this portfolio. There's really no health sector in this portfolio. I guess you could say that 3M is sort of like a diversified healthcare stock. It's actually really a diversified industrial stock, but they do have healthcare in the stock, I guess. They do have healthcare in the company, I would say, or I should say. But yeah, I'm watching Johnson & Johnson a lot. I really wish that stock would dip, but that's going to do it for my portfolio, guys. It's going to do it for today. Again, $356. I'm just showing it one more time, my portfolio, and there's really nothing much else to see here. So that's going to wrap. I'm going to wrap up the video here, guys. Comment, rate, whatever, and I'll see you next time.